here's what I'm going to cover in the next half hour. Number one, I'm going to give you a little bit more of a background on myself, and we're going to talk about some things that I've kind of seen over the years, and then we're going to talk about how to be in business and how to be successful in business. First off, to follow up on what Vic had mentioned, I was actually with the IRS 33 years. Some would call it a life sentence, but that's okay. You know, I've seen the light and come across to the good side. I actually started with them right out of college, and the truth is, hard to believe this, I was only a C student. Can you believe that? You know, but you know what they say? The C students, we hire the A students. So we did pretty good. And it turns out when you work for the IRS, sometimes being book smart doesn't make you all that successful. Sometimes you have to be street smart. And I grew up in South Philadelphia, and so when I would go out on these audits, I may not have known what I was doing, but I sure knew how, if I was the taxpayer, I know what I'd be doing. And so it made it really, really easy for me to be a very, very good revenue agent. And fortunately for me, the people that I work for at the IRS, they kind of recognized my street skills, so to speak, and they would give me a lot of high-profile audits. One of my famous audits, I actually audited Muhammad Ali and went to his training camp in Deer Lake, Pennsylvania. I audited automobile dealers. I'm not proud to say this, but I put the oldest Chevrolet dealer in Philadelphia out of business. It was a very good dealer. Unfortunately, they committed tax fraud. And so over the years, I did many, many things at the IRS. The last 13 years or so, I managed the federal tax audits of Fortune 500 companies that were located in the Philadelphia area. So companies that you may have heard of, Cigna Insurance, Campbell Soup, Armstrong World Industries, you name it, I probably managed a federal tax audit of. And the truth is, I was pretty good at that too. They have a big award at the IRS. The IRS actually had one employee that was killed during 9/11, and they had an award that they created in his name, and it was kind of emblematic of the Employee of the Year in Large Corporate Audit, and I actually won it in 2006. Kind of figured that was as good as it was going to get for me, so I immediately retired after that. I didn't want to take any chances. I wanted to go out on top, and so that's how I ended up coming to, well, after that I retired, came to Vegas, opened up my own firm. Turned out I was just as good, probably better, in working on the other side of the table than I was working for the IRS. Right now, I'm in a firm now I have two other partners, and pretty much we're a full-service accounting firm. We actually do real certified audits. We actually get a lot of clients. We actually represent many, many people that are in trouble with the IRS. Either they're being audited. We do a lot of collection work. My client base is pretty much around the world. Turns out, a number of years ago, because I was getting divorced, I had to figure out how many clients I've actually never met before. And it turned out back then that I'd never actually met 70% of my clients, which is pretty amazing that I could have clients and never actually meet them in person. And so that brings me here today. And I've learned a lot of things since I went into public accounting. And here's some of the things that I hear. And I think they're pretty interesting things. First of all, I do understand that when you have work with a professional, no different than if you go to a doctor, you have a CPA, you kind of build up I like to think you build up a bit of a relationship with that person. And so when I talk to prospective clients, and the first thing they tell me is, well, you know, I really like my CPA. Well, that's really wonderful, except that you're not paying him to be your friend, you're paying him to be your CPA. And the biggest complaint I get from many people is the fact that there really is not much of a dialogue that goes on with their CPA. You kind of go in there once a year, you give him your tax information, he works on preparing your return. You call him about 10 times asking him, is my return done yet? And then, you know, I know. And then you give it to him, and then finally he calls you, you pick it up, you sign the return, you pay him. If you owe him a lot of money, he doesn't seem all that's concerned about it. And the reason is it's because it ain't his money. And so I like to think that our firm has taken on a bit of a different approach to that. We actually give you ideas, We actually tell you how to do things that'll save you some taxes. Let's talk about an interesting concept. And it has to do, and by the way, this concept is used even on Fortune 500 companies. The question is what do you actually make? Now, that sounds like a pretty simple question, but so let's just say you're a W-2 employee, and your W-2 says in box 1, taxable wages, $100,000. Now, if I asked you what you made, you might say, well, I made $100,000, right? That's what box 1 says. Or if you're in business for yourself and you're operating as a sole proprietorship, you know, that bottom line net income says $100,000, and you would say, well, I made $100,000. But that's just not true. What you make is actually what's left in your pocket at the end of the year. And so if that W-2 said you made $100,000, well, don't forget they're taking out Social Security taxes, they're taking out Medicare taxes, federal withholding tax. If you're in business for yourself, they're taking out self-employment tax. So what you actually make for the year is what's left in your pocket. And interestingly enough, I find that most people, while they could be really good business people and they know how to generate income for their business, and they look at that profit and loss statement and they'll analyze it to see how they can spend less next year. Most people actually never look at federal taxes or Social Security taxes as an expense of the business. And the truth is that could be like one of the bigger items on the return. But since you actually don't get to deduct taxes, it's something that's easily overlooked. So the mission is you want to make as much as you can, obviously. You want to net as much as you can, but you want to pay the least amount of taxes as possible. Yeah. Oh, by the way, hey, listen, I should have asked this up front. Who likes paying taxes? Because if you do, you're in the wrong room today, I'm thinking. I've yet to see somebody raise their hand. What was that old Steve Martin joke? How do you pay $1 million and not pay any taxes? First, you make $1 million, okay? So your mission is to go out there and make as much money as you can, and my mission is to try and help support you on how to save some of that money. How's that? Okay? All right. Here's another interesting concept that I see a lot, or I'll talk to people about how things are going with their current accountant, and again, as I just said, people like to think they have this really great personal relationship with their accountant, and here's two things they always say that really cracks me up. Well, last year I got a really big refund. Well, that has nothing to do with anything, okay? The question is not how much money you get back. You're looking at the wrong line. You have to look at the line that says, how much did the IRS keep? So that is clearly not a good gauge. If you pay in a lot of money ahead of time and you get a big refund, but they've kept a lot of money, that means you really didn't actually do that well. And the other thing I hear all the time, which really cracks me up, well, I never got audited before. Well, really? Okay. Well, number one, as I'll tell you in a little while, they don't actually do that many audits of tax returns. And maybe you should have been more aggressive when you did the return. And sure, if you don't take any chances on the return, obviously that's going to reduce your chances of getting audited. But again, that's not a gauge of how well you do, okay? Your choosing your CPA should be based strictly on this should be a business decision on your part. Is this person doing a really good job? Are they helping you? Or they're not doing a good job. Interestingly enough, too, I think that a lot of people secretly think that their CPA is really not doing a great job, but they're afraid to talk to somebody else about it. You would go to a doctor for a second opinion, but not too many people about going to a CPA for a second opinion. And certainly, I'd be more than willing to take a look at your prior tax returns and take a look at them and give you an honest opinion. Okay, so now my next question is, of you all, is I know you're doing either in business, you're going to be in business as part of this 4% group. Are any of you actually in business doing something else? Okay, very good. Well, when you're in business, you know, there's a number of things that you need to consider. And one of them is going to be how you're going to present yourself in business. Most people, when they start out in business, normally start out as a sole proprietor. You know, you kind of just hang the shingle out there, okay? And for tax purposes, that's probably the worst position you want to be in, because sole proprietors just pay more tax. That's just the plain cold truth. I might add one other thing too. Anything that I tell you today, I didn't invent. Dr. Google knows everything. So if there's anything that I speak about today and you're not sure of, you can go back and research it yourself and you'll find out that I'm 100% correct. So most people, when they start out on business, they started as sole proprietorships. And that's bad for a couple of reasons. It's bad for liability reasons, okay? And it's also bad for tax reasons, because sole proprietorships actually pay more tax than normally you would have to if you set up a corporation for yourself. So one of the things that we like you to consider doing is, if you're going to be in business for yourself, you should seriously consider doing business as a corporation. And I'm going to use the word corporation kind of synonymously with LLC, okay? And this is usually a big area of confusion for people. When you set up a company for yourself, okay, no matter how you set it up, and I'll use my example, Acme Dynamite Company, if you're Wile E. Coyote fans. So you could either be Acme Dynamite, you could be Acme Dynamite Incorporated, or you can be Acme Dynamite LLC. For income tax purposes, it doesn't make any difference, because for income tax purposes, you get to choose how you want to be treated for taxes, okay? And depending upon what kind of business you're in, depending upon who the owners are going to determine how we're going to treat it for tax purposes. Now, as 4%ers, okay, your income, the income that you're going to generate, is going to be considered active income, meaning that you're actually doing something. You're selling something. You're providing a service, as opposed to you own rental property, which would be passive, okay? So as earning active income, for tax purposes, the best choice would be to treat yourself as a subchapter S corporation. Now, I know a few of you raised your hands saying you're already in business. Those people that are in business, subchapter S corporation, does that sound familiar to you? Yes, okay. And one of the advantages, one of the nice things about subchapter S corporations is that it actually doesn't pay any tax. Corporations, say like General Motors, that, okay, they're treated differently for tax purposes. They actually pay corporate income tax. Subchapter S corporations actually don't pay any income tax. That's a pretty good deal. What happens, though, is that the income from that subchapter S corporation flows through to your individual return. So you do have to file a corporate tax return, all right? However, it doesn't actually pay any corporate tax, right? Well, how's that going to work for tax purposes? What's the advantages of that? And maybe the best way to explain that is to give you kind of an example. If you are in business as a sole proprietor, and let's just say you made $100,000 a year, okay? You would end up paying income tax on $100,000, and you'd end up paying Social Security taxes on $100,000. Anybody here, I know, realize it's a large room, Social Security taxes is about 15%. So whether I'm calling it, it's either self-employment taxes, Social Security taxes, it's about 15% in total. So on $100,000, you would owe in Social Security taxes about $15,000, right? Make sense? If you did the same exact business as a subchapter S corporation, you owe income taxes on $100,000, but you don't owe the Social Security taxes on $100,000, because subchapter S income is not subject to Social Security taxes. So, and maybe there's a few more nuances to this, but basically, by filing as a subchapter S corporation, you would save 15% in taxes for doing absolutely nothing. Now, I don't know about you, but I work really, really hard for my money. And if I could save 15% by doing nothing, that's the direction I'd be going, okay? Here's another interesting thing about corporations, too, I should have said. I think I actually alluded to. Every year, the Treasury Inspector General actually issues a report card to IRS, and it tells the IRS how it's doing, what type of returns it audits, and how well it's doing on audits, and how well it's doing in collection. Would it surprise you if I told you that the average selection rate for audit for any type of a corporation or a partnership return is 1/2 of 1%? What if I told you that your personal tax return, if you're in business, has a much higher chance of getting audited than a corporate tax return? 1/2 of 1%, which pretty much means the chances of you getting audited are pretty slim. And by the way, that report from Treasury Inspector General, you can find it online, or I can send it to you. But you'll see IRS is in pretty big trouble these days. They don't have any employees left. And consequently, I would argue that number is going to go down and down and down. So from an audit protection standpoint, you might want to consider doing business as a subchapter S corporation. Again, the other big reason that people want to incorporate, and this is the reason they used to incorporate many years ago, back in the day. By the way, even though I was with IRS 33 years, I started when I was 10, so I'm really young, by the way. But back in the day, people incorporated not because we lived in a litigious society, but because they were worried about going bankrupt and they didn't want to lose their house. Okay? Today, when you're in business, everybody sues you. I mean, that's all I can tell you. And so one of the major reasons you want to be a corporation or an LLC in business is because you want to protect yourself from liability. And it doesn't mean that these are necessarily legitimate lawsuits. I used to own a lot of real estate in the day, and I used to get sued all the time. And what happens, unfortunately, is, you end up settling with people because it's just cheaper to settle than it is to litigate things. So you want to be in business as a corporation, number one, for liability reasons, and number two, you want to end up paying less tax. Now, again, if you want to pay more tax, I don't know if I can help you there. I appreciate it, that's for sure. But let's talk about some other things about corporations. Well, first of all, let me just say, too, that even, I mentioned that I managed the federal tax audit of many large corporations. Would it surprise you if I told you that the corporate tax laws are the same no matter whether you're a big corporation or a little corporation? And, most people think, they hear the word corporation, they get very concerned. Well, how am I don't know anything about being a corporation. The truth is when you're in business, whether you're doing business as a sole proprietorship or you're doing business as a corporation, it's going to be pretty invisible. You're going to be doing business the same. The only difference is you're going to be reporting your income and expenses on a corporate return versus your personal return. So the laws are the same. Although, I have to admit, the tax laws, they are certainly geared toward big corporations. One of my audits I remember that I managed was a Bethlehem Steel Corporation. And here's what the tax law does, by the way. Back when they created the tax law, the mission of the IRS was to basically collect tax. Well, now the IRS does more than that. It actually helps create social policy. So, for example, poor people get earned income credits. So it actually does a lot more. And now, of course, they're responsible for collecting premiums for under the Affordable Health Care Act. But back when I was working for the IRS and I managed the federal tax audit of Bethlehem Steel, they actually passed tax laws for specific companies. So if you were a company that's located at the intersection of two streets, which of course was only Bethlehem Steel, okay, they passed a special tax law just for Bethlehem Steel to be able to get a refund from the government, which it normally wouldn't be entitled to. So I say the tax laws are the same, except if you're a really big company, then there's a chance that the IRS could do something for you that's different than everybody else. Here's another couple of things I want to talk about, a couple little tax tips. Well, first of all, you know, one of the things that I see when people are in business, and I realize since I'm an accountant, it's easy for me to say, is you want to try and be as organized as you can, and you want to try and keep the best records that you can. So when we prepare tax returns and people bring their information in, we see everything from beautiful financial statements to a shopping bag full of stuff. And so we don't like the shopping bags, by the way. So what you want to try and do, though, when you're in business is you want to try and keep some decent records. When you set up a corporation for yourself, one of the things that we want you to have is we want you to have a separate bank account for your corporation, and we want you to try as best as possible to try not to commingle your personal funds and the business funds. Not because we couldn't figure it out afterwards, it's just way easier for you when we go to do your tax returns. So you want to try and separate that as much as possible. So record keeping is a really important part of what we're going to ask you to do. And it doesn't have to be perfect. It could even be something as simple as you just have one folder that you put your stuff in, or you make sure you put all your income from your corporation into a separate corporate bank account. Okay. There's a number of things that, and these are some tax tips for you, which, by the way, I didn't invent. And again, a lot of times what we tell you to do could depend upon how much income you have. So, for example, if you don't have any income and you're not paying any tax to the IRS, it's pretty hard to get below zero. I would try, but I don't think I can beat zero. So depending upon how much income you have could determine some of the things that I tell you think you should do. So for example, let's just say you're in business for yourself, and how many of you, I'm guessing a lot of you have kids at home, kids in college maybe. What about the idea maybe your kids are here helping you out with the business? What about the idea of putting your kids on payroll, right? Does that make any sense? And let me tell you how that would work. Let's just say, for example, that you personally are in the 33% tax bracket. Just saying. And you put the kids on payroll. Well, payroll taxes are 15%. Remember I told you that? Okay. And so if you put the kids on payroll, you'd have to pay the employment taxes on them, right? 15%. But what if you got to deduct their wages and you were 33%? You would actually end up paying 18% less in taxes by putting the kids on payroll. We have clients that have 6 kids. Hell, 6 kids, if you paid them $6,000 a year, 18% of $6,000, I don't know, it's about $1,000 maybe, something like that. I don't know. I'm really not good at math, I should tell you that. Well, multiply, if you saved $1,000 for every child that you had on payroll, that'd be like, and you had 6 kids, that'd be like $6,000. So the idea here, by the way, is that there is no silver bullet answer on how you can make money and not pay any taxes. Many times, it's a lot of little things, like putting the kids on payroll, okay? Here's an interesting thing that I came across, which most people miss. Do you know that you could actually deduct sales taxes on your personal return, even if you're not in business? Did you know that? Oh, yeah. Oh, yeah, Jerry. A Seinfeld reference. And so most CPAs will miss that. So if during the course of a year you've you've had a lot of expenses that you end up paying sales tax on, sometimes that could generate a greater deduction for you. So there's a lot of little things that you can do if you're in business. If you're in business, we can do pension plans for you. Great way to save some money and get a nice tax deduction for it. But everything that we try and do for you is going to be geared to where you're at. If you're not making a lot of money, there's not much I can do. So your mission, I tell all the clients this, your mission is to make as much money as you can, okay? And you leave all the other stuff to me, okay? All right? How's that sound? All right. I will be around the rest of the afternoon. If anybody wants to see me personally, I would love to meet every single one of you, believe it or not. And so that would be a challenge, I know. But if you have any individual questions on taxes, if you're having any problems with the Internal Revenue Service, I'd be more than willing to listen to your tales of woe. Dealing with the IRS is not easy. The only thing I would suggest there is you actually don't want to do it yourself. It's a huge mistake. This is what they do every day. You're not on the same playing field with them. And so, so if you're having any trouble with the IRS or you have any questions about being in business, I want you to know that my involvement with your business is just not limited to speaking to you today. I have no life. I work all the time, okay? That was the reason for divorce number 2, okay? By the way, not a great investment. That's right. I work for alimony, okay? As you may know, Nevada is a community property state, as I found out. And so, but yeah, I'll be available not just today and this afternoon, but I mean, if you need help when you get back home, you just give me a call, okay? And I'll help you. How's that, okay? All righty?